This is askSlim Live for June 6, 2023. Information and support for traders and investors in a time of crisis and beyond. I know there are many people that are here for the first time, so we're going to test out for just a little bit. Just test raising your hand, and then I know that you know how to raise your hand because we may ask you to do that later. Very good. I see a lot of hands going up. So we say that crisis and beyond since 2020. Actually, we started doing these live shows back when the pandemic hit in 2020, and we've been doing it ever since. It seems like there's always a crisis somewhere, so I left that slide up just as it is. So great to see so many people in here, really a huge crowd today. And of course, that's because we're running our premium services preview, where we're letting people in for a couple of weeks to really see our most popular services. And we do that because we want you to get familiar with the things that we work with, the work that we do, which is very different. I saw some questions coming up that make it very clear that a lot of people are here for the first time because they're asking us, well, is our analysis like Hurst cycles? And yes, it started out with that. So lots of people probably just getting a sense for the type of work that we do. And we have just an absolutely huge amount of content that we put out there. And all we care about is giving you information that raises your odds of success, because your success is our success. So that's why we do what we do, just to try to get you to be as good of a trader as you could possibly be and have the amount of knowledge in the markets that you could possibly have. And we have this amazing team of 4 analysts here, plus a very large support team that allows us to bring all of the content and the new developments that we have brought, the technological developments, our own version of AI right now, especially in the market condition monitor, which is just really in the infant stage for the world, and certainly for us as we develop that out and bring you the ability to really get great information just really at the fingertips or at your keyboard. So we're working on this daily, and these guys are having meetings on this daily. So the market condition monitor will continue to be developed, and we're going to have a great version of that for day traders coming out in just another number of weeks or month, and you're going to see just amazing things. So really wanted to give you a chance to really see what we do. And of course, we have many of our members in here that have been around for many years with us. And I get emails from people that tell me they've been around with me since when I first started Tasty Trade, which was when I started doing that show back. That was that was 2012. So here we are, some more than 10 years later, almost 11 years later from me starting out that. And what a great experience for me to get started, so I could be doing this with this team and with you. Again, for those of you that don't really know me, you could check out the bio that we have on the team page, and we have little interviews for all of us, and the one that the team did with me is fantastic. So you want to really get a feel for who we are, that's a good place to go. So welcome to all of you who are here for the first time. We can do a little legal stuff before we get going. Information at askSlim is for entertainment and educational purposes only. It's not investment advice, and the sole purpose of this website, anything we do orally, written, or in video, any way referring or relating to this website, is for information that you can use or any entity can use with their investment advisors. And this is not a substitute for advice from investment advisors or from your own experience. And you should consult your own trading plans or financial professionals before making any investment or trading decisions. The live events are being held as support for our members. They're not included in memberships. We do this every couple of weeks so that you can really get a feel for who we are, and that we can deal with you really on a one-to-one basis. And we've done some great shows and variety of shows where we did things only for people that invested in our cycle analysis workshop. We did one specifically on the psychology, trading psychology. So we have a lot of things that we do, and these are important to attend. I think we do some very different things, and you can ask us questions. So it's created for a time of special needs, and these events are likely to be recorded. This one is being recorded right now, and it may be offered for public viewing. It's always put out on the website for our members, and we always act in ways to protect your identity. So if a lot of you signed up to become PSP members in order to see this, we will not ever share your information. You don't have to worry about that. Third parties are not going to market to you. We just want you to be part of our community and feel safe here and learn from us. We can't guarantee that your identity is going to be completely anonymous, so your participation in this event acknowledges that you understand and agree. Please refer to our terms and conditions and full legal information. All right, so this is our team, and for those of you that are brand new and you have information, you want information about our website, or you have website issues, you want to upgrade or anything like that, you write team at askSlim.com. Brian runs that. He's amazingly good and efficient. And anytime you write to him, he tries to get back to you in a few hours to no longer than 24 hours. So you get really helped by them. Matt is in charge of so much of this as our COO, and you can see the list of things that he deals with here and more, much more. Arvi runs the trade ideas, simulator rankings, chart analysis, everything regarding the level 1, 3, 4 analysis. He handles so much on the analytical side, and one of the great experts in cycle analysis in the world. Katie runs our option content. She, in her own right, is a great cycle analyst and really understands the Tastyworks platform, Tasty Trade, which is what we use. And if you want to become a Tasty Trade member, do that through our website, where we have marketing partners, because you'll be getting some specials, and we get a credit for that. So please do that. So if you want any questions about our option content, write to Katie. For me, generally I ask questions from only level 3 and 4 members and regarding the cycle analysis workshop. So, and it's only about trading and analytical general questions. Remember, I never ever give advice. And if you send me and ask me about something about a market, I'm going to tell you I can't give you advice. All we do is teach you so that you can make your own decisions. Jason runs Discord, does a great job with that. And if you haven't seen our Discord, it's a very active community, and our analysts are on there to help you. So it's important that you do check into Discord and see the stuff that's going on there. Matt is always creating videos and always doing special webinars for you to understand these things more. He's going to tell you about another one coming up later today. This is our analytical team. I've been around now. I have now begun my 50th year as a trader, starting on the CBOE in 1974. I'm one of the only people that were original traders down there that is still in the business and love doing this. This is my hobby and my life. So that's why I'm still here and still trade. Matt is our COO. And also a great analyst. You see all the work that he does also in putting out the SIR and the SIR report, and just does an amazing job of running it. Arvi Ramachandran began with me some 10 years ago or so back from Tasty Trade, and has, as I said, become one of the world's experts in cycle analysis. Katie is fantastic at it also, and we are all here today to help you. Remember that we're going to run here now about 45 minutes, and so we will not possibly be able to take all your questions. Here's the agenda for today. I'm going to briefly go through the stock indexes and give you my thoughts on the analysis. Remember that our analysis is cycle analysis. And essentially, we look at the rhythms or energies in the market with a lot of our tools, and from that extrapolate from the sum of the evidence what our projections are. And you'll see how we do that if you are brand new to this. We're going to do an express round where we answer your questions. All 4 of us will handle that. Generally, I do the futures questions, and Katie and Arvi do the equity side of that, and Matt does things around the website and analysis on the SIR and shorter term stuff. So you can put your questions up and the floor will be yours on trade planning, our services, chart analysis, trading issues. Matt is then going to give you a brief overview of the services that the people that are now in the premium services preview open house, you want to stay for that. A lot of people just want to see the analysis and then go running out of here. I don't want you to do that because Matt is going to show you some stuff that's important after we go over the analysis and your questions. So please do stay for that. And for the people that are long-term members, there's going to be stuff of value in that there also. That I think because you have access to this stuff, I think you should really stay to the end also. So we have a very, very full house in here, and we're not quite at the edge where Zoom will stop us, but we have a lot of people in here. So let's take a look now as we switch over to the analysis. All right, so my analysis on the stock market has been that the market has been overall positive. And if you go to our year-end show where I talk about the stock market, excuse me, the one published in December, still was a probability that that the market would be coming down and testing the October lows. The one that was the part 2 in middle of January was talking more about the fact that that was less likely. In both of those, we talked about 4,300 in the S&P 500 as the level that was our initial target for what we thought would be a bull market this year. Now we got up to 4299.28 yesterday. So I would call that a pretty good touch of our target over there. And the range of the upside in here we're looking for is 4,300 to 4,360. Now, where the market is right now is that it got driven up by AI. We all know that, and that the NVIDIAs and the stocks that could benefit from AI exploded to the upside. That drove the indexes higher, and the Nasdaq is now beyond the target that I had for this year already, with the money flowing into those stocks that are heavily weighted in those indexes. The Dow has languished and the Russell was in terrible shape. Now we're getting into a period now where that is likely changing. And we could see the rotation beginning today as the Russell was up 50 points while the Nasdaq was down or around unchanged most of the day. So the money is starting to flow in the other direction. So that's kind of the setup for the charts that we're going to look at right now. For those of you that are new to our charts, again, I want to remind you that what you see on the bottom are the cycle brackets. These essentially are just simply a drawing tool that helps us understand the rhythms in the market. The actual cycles are the lines that are up on top, and the lines that are dotted like this are areas that we're projecting based on the ideal cycle. So it's the ideal cycle rhythm or period, which is the length. And then what we use is our added tools, which are the momentum indicators, which on the weekly here is the reversal scout. On the daily here, it is the slim ribbon. On the bottom, the slim ribbon PO. And we have, of course, the market condition monitor has the built-in algorithms that use information from our proprietary indicators. So we also put in support resistance levels. And if you look here at this weekly chart, you can see that right now. What this is showing is that, well, we've been in a rising phase here in the S&P 500 that began right here at this trough. Then it rose here when the reversal scout turned up right at that point. I see a lot of hands going up. Interesting. This began to turn higher. That gave us the indication right over here that this was the cycle trough. This was our signal right over here. And also once the daily patterns begin to develop in a positive way, that also tells us that the weekly is positive. So it's been positive through this whole period. This period right over here is where we thought that the FEZ, which is the stocks 50, and the Nasdaq was going to bottom right over here because it was an out of phase cycle. And you can see in here when that got weaker and when the FEZ was falling off and FXI, China, was getting slammed, then all we got was this tail right over here. There was almost no declines right here. That was stronger even than I had expected. And actually the daily low that occurred over here, which I'll show you in a moment, was early. And early lows generally mean buyers are anxious. So when it got up to this level here, it got up to our target here of around close to 4,300. That's the major 61.8% fib. When I talked about it getting up to that level, it was back down around over here, right there. And then, of course, that was in the 3,800s. And this is that mini bull market that we're really expecting here in this year. Now it's in a big resistance area, 4,300 to 4,360. Were this to be able to get legs and really begin to the move to the upside in a significant way, then the top of that area right over there, which is the 100% fib extension, is at about 45.20. I'm not talking about that level now other than just mentioning it to you because I think it's going to be very difficult to get through these resistances. Now where we are is in a period right over here where the minor cycle, you can see that minor cycle here, is likely to pull back in here. This is this period where the tech stocks are likely to pull back, where the money is likely to flow out into other areas of the market, and that will weigh on the indexes. Now, the Dow might still pull back a little bit, and the Russell, or they might actually move up while this index is moving down. That would not normally be something I would say would be happening, but we are now in a market that has had out of phase cycles that are very strong, with the Nasdaq moving up as strong as it was and the Dow moving down and the Russell moving down. So that could actually bring a reversal where you get a decline right in here that is somewhat shallow. This is only 41.85. This was over here only 41.35. We're not looking for a big decline in here and then moving up again. And that's where we see the move up into the late summer, early fall, up to that 43.60 area. People are writing to me and saying, well, we're already up at 4,300. Why are you only looking for 43.60 if it's a bull market? Well, that's going to pull back in here, and it's going to trade in a range that we're going to get in here with an upward bias coming here in July, August, again, after some corrective period. That's this minor cycle. Look at this minor cycle right over here. You see that dip? Well, that was even stronger on the downside that we were looking for, and then it moved up again. You can see the minor cycle in here. Well, that brought a huge amount of selling in there. I don't expect anything like that because this was during the bearish market period. This is during a bullish market period. So during that time frame, you get positively configured cycles, as you see us drawing right in here. And then there'd be another rally out over here, likely, that takes you towards the end of the year. So I wanted to give you a sort of an in-depth look at this. And now look at everything a little bit quicker so you get an idea because of all of the new faces that we have in here. Here's the daily chart in here in the S&P 500. This is the time frame right in here that we expected it to be a sharper decline because the FEZ was falling down in here in China, and this was just the alignment with the low coming in the rut. But look at how early this low came relative to what was expected, and that happens when a market is anxious, when the buyers are anxious, and certainly the AI craze helped. You can see in here the slim ribbon right over there. The slim ribbon, or the slim ribbon PO on the bottom, gave you the bullish signal right over here. It turned neutral for a couple of days here on a little correction, but each of these upward arrows gives you the resumption signals in momentum, which says it's very likely that it's going to be moving up again, and you can see that was very clear. This is a very important indicator that we look at, and only available to level 4 members that use the Thinkorswim platform. This period right in here, you can see, has been this rising phase as the AI craze went up. This gap is NVIDIA's earnings, essentially. And this is a very strong market in the S&P 500. But here is that corrective period that we're looking at that matches up with the decline out into early July that I showed you on the weekly chart. Now, looking at the Nasdaq, of course, is very important. And raise your hand if you followed what I've said so far, so that I know that. Okay, tons of hands going up. And raise your hand if you're brand new and this is still confusing to you. When you look at this, and okay, we see some hands going up on that, and that makes sense, especially if you are brand new to this style of analysis. So here's that Nasdaq. We're on the daily chart. You can see the same thing where the slim ribbon was positive, and as it's widening, it's even more positive. Look at how small this dip was from this cycle right over here. The same thing over here, and continues to move up. That was early on the AI craze, and you could see this signal right over here, which said upward momentum is likely to continue, and that happened. So now we have this period out into early July where it is likely to correct. If I go to the weekly chart over here, you can see that same thing as we saw on the S&P 500, a period here that is likely to dip out into the early July period. These two blue lines are the cycle timing lines, and you can see that the middle of this ideal cycle is then we have generally 3 or 4 days on either side of this ideal that gives us the range of timing for the downside. The reason this is coming out towards the right side of it is because that's where the daily cycle comes out. So we look for synchronicity in the cycles, and this support area right over here is at around 13,960. So that would be about 600 point pullback. That seems almost impossible based on what we're seeing in here. So look at this period in here where this comes down here into September. So you know that that's where that bigger period of risk is. But right now we're focused here on this period out into July. Now, the reason I want you to see that and how that period into July matches up with this period into July, this says July 6th on the bottom of that cycle, is because when I look at the Russell, and this is so important on the daily chart, you can see the Russell has a shorter cycle and an earlier bottom right here that comes somewhere around June 9th to June 20th. And then after that, it's pushing up on these two cycles. What that says to me, and look at this gorgeous base that's forming in here, that confirms with the weekly trough, which occurred right over here. What this says to us is that while this period out into July, way over here is where the Nasdaq is likely to be suffering. Look what's going on here. We have this out of phase cycle where the Russell is likely to be moving up. This is why I've been talking about use the MCM, use our indicators and get a sense for when the Russell is doing better, or maybe even the Dow, because I think money's going to be flowing in there. While the correction is going on in the Nasdaq, this could be an amazing setup for a pairs trade. So I'm using all this analysis and the sum of the evidence to say, look where we are right now. We could be in a time frame where the indexes don't really go anywhere, the broad market, where we see it's been driven up by AI and by these heavily weighted stocks. We can get in a period where it's really confusing because breadth maybe expands, the Russell and the Dow go up, but the indexes are not really going up. And that's why I think it could be a confusing period, or a more confusing period. And this to me helps me understand it. If that does occur, and you could see today it was starting, look at this upside move right over there in the Russell for today. It was really nice, ended up about 49 points. While I go back to the Nasdaq over here, and you see the Nasdaq was essentially flat. So that went nowhere. And you could see how a pair trade, if you were long IWM and you were short the Nasdaq, it would have yielded a huge amount of money. And Matt, you can vouch for this. Those of you that looked at the SIR live stream this morning, the Russell was taking off while it was so obvious on that chart. Would you agree with that, Matt?
For sure. Yeah, I can show that.
Yeah. So you want to show that?
Yeah, I mean, I'll just take the 30 seconds here.
Yeah, sure. I think it's really important to look at, because
it is.
A lot of people don't even know if they're a Popular Services Preview member, that they actually get this chart. So that Matt's going to show you right now.
Yeah, here it is. Can you see it?
Look at that. I mean, you can see the upward
this is today's
turn.
action intraday, comparing the three indexes. it just exploded. This is a very, very wide disparity between the other two, exactly to what you're speaking of. And indicative of being in that early rising phase on the intermediate. But the reversal scout gave you the tip early in the morning. The MCM triggered very quickly that this was in a very bullish setup, and then it blew through the acceleration zones, which are the yellow with the green arrows, and then it came into the key resistance, which should cause it to have some pause, right? Consolidation, and that's what happened, and then it closed right at the tip of it. So,
and look at SPX and Nasdaq.
yeah,
I mean, they hit those
waffled.
Resistances and went nowhere.
Yeah,
you know,
yeah, it's pretty interesting.
And you got into the
NVDA
yellow zones on Russell, the acceleration zone, and it just exploded. So this is just fantastic.
And this is done pre-market. This is pre-market. This isn't after the fact. This is before the fact. You know, members get to check this information out, and you can use it as a roadmap.
Yes, absolutely. That's fantastic. So I wanted to share that because I thought it was such important information. So you really, when you look at that, you really get a feel for what we do and the extent of our analysis. And what I just showed you is just really scratching the surface on everything that we bring. So I hope that you found that very interesting. And now we're going to move into your Q&A. So well, the way we're going to handle this is we're going to go through your questions, and we're going to see which ones we can answer, which ones we can't. Remember, there are many, many more questions in the Q&A that we're going to be able to handle today. So we will do our best. What do we have? I'll just go through this really quickly. Bequivist says ante up. Okay. We have Michael, who's a level 4 member. I know that because he's just written to me, is asking a question about the VIX and wants to know, can we get an early bottom given the projected low is around 616 in line with the minor low in the indexes? Or could we be tracking an alternative gray daily cycle you labeled a few weeks back? Let's just take a look at that as I switch over to the VIX analysis. And for our level 4 members, this has all been updated for you today to put on your Thinkorswim platforms. Level 3 members, Matt, has that gone up yet on the hubs and stuff, the static charts?
The new ones will be updated later this afternoon or this evening.
Okay, great.
Yep.
So this is what he's looking at here on the weekly chart. So Michael, I want to say to you that if the bottom formed right now and the market turned down for a while, that actually would fit on this weekly, the one that we're reviewing right over here, because this, you can see these dotted lines. These actually may be better cycle harmonics than the original ones we had in here. The VIX was an amazing piece of information for us for months and maybe more than a year, with the beautiful rhythmic motion we had in here. And then we had this one of our members send us this alternative, which also looks really good. So there may be a bottom already getting ready to form right in here for that decline that we're looking through July, where we get a pop in the VIX. But all of this looks like it wouldn't last very long were that to happen. Here's the daily chart. And then this is the grayed out or ghosted cycle that we're looking at. That just doesn't look, Michael, like it has a lot of value to me in here, because the alternative ones, or the blue dots based on the shift, are the ones that really look correct. Now, yes, we could still get an early bottom in here, but that would be a little bit early, but we're already inside the cycle lines right there. So it would only be a little early. So if the market wanted to turn lower right now and the VIX move up, it wouldn't be outrageous with, the bottom in the VIX due, a short-term bottom, looking at this in the next week or so, and the bottom on this alternative cycle looking like it would be right now. But again, if you got a pop up here in the VIX, then it likely would be coming down again from both of these other cycles. So I hope that answered your question on that, Michael. It's reasonable to expect the market to pull back in some minor way. And if that's the case, I don't think that we're going to get any kind of a big upside move in the implied volatilities at any time now, even with some pullback in here. Just note this, that the next question is for Netflix and CMG for Katie and Arvi, and Tesla is also a question.
Okay, got it.
An anonymous attendee says, Slim, very nice to see you. I hope you're doing great. Slim, what is your outlook on the weekly charts for the second half of this year in natural gas? It appears to turn downward on the monthly chart from June. I'm not going to share the monthly charts right now. I actually saved those for our level 4 members on by request. But as far as the weekly chart, it does give some indication on natural gas for that. So let me just get the analysis up here for the weekly. And here is that pattern. So when you look at these harmonics in here, this is really it's getting no traction at all on the upside, and I would say that a very, very best case in an extreme upside move would be this major 23% there, which is right around 385, something like that. That would be the best that I would see in here, outside of some crazy thing that happened out of OPEC or out of Russian gas or something. It would take something very significant to change what is just simply, a hockey stick when you look at that right now. And this pattern really points out to August, and then maybe some minor rallies September, October. So I don't think natural gas looks like it's very good. I keep putting out on my commentary, this is the daily chart on the right, that natural gas is just seemingly very untradeable to me right now. So, he says, thanks very much for all you do, and thank you. We really appreciate you. Bader says, I love you, Slim. Cycles change my mentality on the markets. Well, I am really thrilled to hear that, because that's what we want. We want you to understand the markets in ways that you couldn't possibly get from any of the other sites out there, because they just don't teach it this way. Ron says, no hurricanes allowed in Florida this year. I hope not, because I've been delaying getting a generator in, and I still haven't put it in yet. So I don't really want to spend that money on that. So, well, they hit us once every 30 or 50 years. The next time I might not even be here. So who knows? GDX review if possible for Katie and Arvi. Could Katie and Arvi look at NVDA? Can you please touch on the FOMC raising hike and the market outlook here on out? Well, you know what? I'm going to answer your question. I was kind of saving this for market week, but I answer this for you, and the other 10,000 people that will read that watch it will see it on market week. I think there's something very significant happening right now, and that is that the Fed the government has to refill its TGA. It's essentially the money it has, $500 to $600 billion. In 2011, that brought a big drain on liquidity, and the stock market had a big break at that time. This is a different time right now, and I credit Stephen Van Meter, who's a very interesting guy, but has gone too doom and gloom for me. But he is very knowledgeable. He made a point that there's massive amount of money in the money markets right now. There's over $2 trillion in the repo market. That money is in there because it's essentially been free money in the repo market. The government gives the banks, and everybody is in 4% money markets plus right now. And that money, if it gets shaken out, will move into the T-bill auctions. But why should it get shaken out? The only way it's going to happen is if the Fed pauses, because then the markets will start to believe that interest rates are moving down, and money will move out of those where it's being essentially parked, and they'll buy up those bills really quickly. You would see a lot of the big demand for the government issuances, and if that would happen, interest rates would move down very quickly, and this whole concept of the the drain of liquidity would just disappear out of the markets, and you'd probably get another upsurge in the stock market at that time. That could take a couple of months in here for that to happen. But I think that he's making a great case that the FOMC knows this and they're going to pause. And I've made a case that I thought that they were going to pause now. And of course, there's some FOMC members that are out there saying that they're going to raise rates potentially, or they're not done. I think they're going to pause and then be raising rates again out later in this year or in 2024. I don't think there's a pivot coming for a long time in this market because they have a lot of damage. Anonymous, they have a lot of damage that they need to repair in their credibility. I'm already jumping to the next question mid-sentence. Is there a model or allocation portfolio recommended? Actually, no. However, that's on our development list. So somewhere down the road, we're going to have for our top level members, a model portfolio that's based on our algorithms. And so that's way down the road, way behind our other things that we're going to be bringing out. We have Shopify and Square on the list there for our other analysts. Slim, what do you think about XLB and XLF? Well, if we get to that question, that'll be for Arvi and Katie. Would it be possible to have a quick breakdown of membership levels? There's so much information available. Matt, you want to just really quickly answer that question, what their best way to do to get that information?
Sure. Well, on Friday, I'll be doing a live PSP overview where I'll step through each of the services, and essentially that'll cover the various levels. You can go to the website and there's a breakdown of those four. If you write to me directly, I can also direct you to some previous videos that we've prepared that reviews our membership levels.
Great, thanks for that.
Yep.
David says, so we're range bound. So are we range bound for the rest of the year with strong volatility? I actually think it's going to be pretty range bound for a good portion of the rest of the year, and probably not real high volatility. I think volatility overall is going to stay relatively low. Slim, is it possible to take a look at VIX? I think that we've done that already. I don't think we have TSX, do we? That's Canadian index?
No, we don't have anything about TSX, no.
Okay, because I know you did country ETFs, so
yeah, that's not on the list though.
That's not on the list. Okay. No. Based on what you said about an early low in the previous minor cycle in SPX, is there a greater probability for another early pullback or low in the current minor cycle? Market is still bullish. You know, I got to say that one early low doesn't necessarily get you another early low. And if anything, what happens is that the next cycle tends to even it out and might actually be a little bit long and get closer to the ideal. So I don't think that you get that. There's a question on XLF there. If you get to that, KRE, MOS, which I know you did some work on today, and
yeah.
Etsy. You guys got a lot to do here in a short period of time. Devin, you're asking some questions that I think I've already covered. I don't know. ST is on there. He says, how to use the last 3 charts you have shown for level 4 members. I don't know exactly what those were. So you can, if you have specifics on that or screenshots, you can send that over to team@askSlim.com, and then they'll be able to help you with that. GF, is there any specific market condition when a cycle analysis works best and not best? Actually, cycle analysis struggles in slow rising markets because the troughs are not visible. And when that happens, we tend to struggle. What we really do then is rely on the momentum conditions, which keep our bias properly directed for the market. In free fall markets, it also becomes very difficult because you know, you get some troughs that are very deep, and then you get rebounds, and sometimes those rebounds get tested and sometimes they don't. So really very, very low volatility markets and very, very high volatility markets tend to be the most challenging. The ones that are kind of normal fluctuations, which I think we're mostly in right now, tend to be some of the best periods. I think that we answered BV Quest on how our cycles are formulated when I went over the S&P 500. Slim, where do you see precious metals short and long term? Okay, I'll take this one right now. I'm just going to look at gold and silver for you. Here is the gold market. And this is the intermediate term on the left on the weekly chart. This is pointing to the corrective period that we are presently in, coming down into the August or early September period. This is a negatively configured cycle and warns that if you get any more rally in here, it is likely to move back to the downside to test this area around 1920 right over there. This is your minor cycle. This is your cycle breakdown right over here. This is cycle support right in here from the weekly chart. So this looks like it's likely at some point to be moving down again. So our downside target right now is about 1920. As far as the long term on this, nothing, this in no way does this violate a very bullish long-term condition as far as the gold market goes. Silver market quickly looks pretty much the same. You can see in here, this looks like it's going to come down in the into the August period. This has a negative cycle configuration and is likely to come down here to somewhere around $22.50 sometime by around the end of June or the beginning of July. We have Schwab, PayPal, Google, lots of questions in here. Hi, what will happen to TLT? I'll quickly give you the TLT, which is looking at the likelihood of another few weeks of struggling right over here. And you can see that how that looks right in here because there's a resistance zone, maybe coming down to test these lows somewhere out in July, but then getting into a favorable period again. And right over here is where I think yields are going to be moving down very sharply in this period of late June, potentially into late August or early September, in line with what I said about the Fed. So that's a look at the TLT. All right, Katie and Arvi, I'm going to hand this over to you.
Okay, let me share my screen. We're going to look at Netflix first. It says it's loading. Please let me know when you can see Netflix.
Got it.
Okay, great. All right, let's zoom in a little bit and we can see we had this big drop after the pandemic, and then we got a basing cycle to form, which is a positively configured cycle after some one or more negatively configured ones. And that means that the cycle ends higher than where it began. So this was very strong. As you can see, we got our cycle peak right here. And then we basically had 1 to 2 weeks, a little tiny dip on the downside before we went up again. Now, the cycle that we're in right now is kind of an unusual shape because we had a nice move up. This blue line, I think, is probably the 61.8% fib extension level. Tag that, and then we almost broke down again. So when that happened and we got a red negative reversal scout, we didn't think that we would be able to get back above this high. That would be low probability, but you can see that that is what happened. So now we just this week have got just up into the very bottom of that target zone, and we have a weekly cycle timing window coming out that starts in a few weeks. 619 is the beginning of that, and 728 is the end of that. So somewhere out in mid-June to July, we would expect Netflix to form an intermediate low. So you can see that this is very bullish. It's a right-hand translation, meaning it's peaking on the right side with very little time left to decline. I left the retracements in here so that you can see these levels. The top of that support zone about 360, the bottom around 327. So as I said, this was June 19th to July 28th. If we switch over to the daily chart,
I'm
you
making
can
note that's
see that
that's
this is
very much,
very bullish.
that is in alignment on the weekly chart with what we said in the Nasdaq, by the way.
Yes. So the reason that I called attention a couple of times to the weekly cycle timing window is because both this cycle that we are in and the next one fit within that weekly cycle timing window. So we could get our intermediate low in this cycle, or we could get it out in the next one. So notice that this is very bullish. We have a very wide slim ribbon. Reversal scout is green, slim ribbon, green, everything is very bullish. The question that was asked in the Q&A was if we see enough weakness in here to buy puts for next week. There's nothing weak about this right now. So it's not just about the timing. You want to be careful with that because you see timing windows coming up and you think, oh, there'll be a downside move. Let me buy puts or buy a put spread, something like that. But you haven't seen the weakness yet that you're expecting to see. The more conservative move would be to wait until you see the weakness that you expect to see, then buy puts once you get a little bounce out of that weakness. If you also wanted to just dip your toe into the water there, you could do something that was less risk, like a spread, and a narrower couple dollar wide put spread, or even a butterfly, something like that, where you're really not risking all that much money because this is not weak at all. We would expect to see that somewhere out here, but it's not coming yet. So that would be a bit anticipatory to go ahead and start buying puts, thinking that that would happen, especially if you're doing a very short time frame like next week. There's nothing in here that indicates that that would be a good idea. Let's go over to Chipotle. So this was in the same question, if there's weakness showing. Again, very bullish. This is a vertical reversal scout. Now we are pretty far from these moving averages. And again, we have this timing window coming out end of June to beginning of August. So that same kind of time frame. And, this is starting to flatten out a bit, but it's really, I would hesitate to say that anything about this looks weak. Now, having said that, if you switch over to the daily chart, and again, this is kind of what you want to do. So you can see we had these are longer cycles. These are 46 bars. So we had, kind of this nice up move and then, kind of exploded up on earnings that got basically just a sideways move, no retracement really whatsoever, a tiny move up. This cycle is the one that is in sync with the weekly cycle timing window. So we do expect, if this is all correct, that this would, show weakness and possibly even a breakdown. Here is the cycle low support that is at 2026.72. It's really not all that far away, especially for a $2,000 stock. You could see this is just moving sideways. So again, for buying puts, I would wait until this broke below the cycle low support. And then once you get that, if it gets a bounce up into like a resistance zone after that happens, then that might be an appropriate time to go short on a stock like that. Let's see, I think another one was NVDA. We all know that this one has had a very large move up. Let's zoom in here. Okay, so here was our basing cycle. Again, after some of these negatively configured cycles, we have 2 out of phase cycles here. The blue one is the dominant one, and then this one is slightly out of phase. So you can see that we're having this tiny little pullback into this, the declining phase of this out of phase cycle. So then we could get another move up, but this has really had just an explosive move. So it would be reasonable to expect some consolidation in here through these levels. If we switch over to the daily chart, we have a daily cycle timing window coming up 614 to 626. So if you were looking for a long side opportunity, that window, if NVIDIA gets into this support zone and can hold it and starts to move back up, that might be the best timing that you're going to see to get another upside move. But I'd be careful about these levels that it's already reached. You know, just watch how it behaves when you hit the 420 area and be ready to get out of that, because we might get just some sideways consolidation now. But this is all very bullish. This is a positive slim ribbon, positively configured cycle. Look at how wide these ribbons are. And if this turns back up, you'll get a momentum continuation to the upside signal on the slim ribbon PO. Shopify, I think I haven't looked at my Shopify chart for a while, but let's see what we've got. So again, we've had a basing cycle here, positively configured, ended higher than where it began, just got into these supports and then up again. Now we've tagged the bottom of this target zone, and then we had this little looks like a bull flag that formed and up again. So we might be able to get up to the top of that target zone. We've got this timing window out here in August 8/7 to 9/15. I do not know what my, let's see. So this, if you look at it, needs to be updated, but this is formed an early low. So we would probably shorten up these cycle brackets, maybe by 1 bar, and shift them slightly to the left. And so then that would line this up better, and that would bring out a timing window coming up in July. So this, you know, if you get a pullback in here, like just a couple of days, I would consider that a bull flag, and then probably up again. So this is, we still have a negative reversal scout coming out of that time, but this will turn up. And we have a positive slim ribbon right now, so kind of mixed momentum conditions, but I have a feeling that that'll become positive. And the last one that I'm going to look at before turning it over to Arvi was XLB, the materials ETF. So we had a timing window from 529 to 77. So we may have that. This candle was the very first week of that timing window starting to move up. So we got into the bottom of this support zone here. Again, this was kind of a neutral cycle. The peak was right in the middle and then just moved down. We had this kind of a mid-cycle bounce and then back down again. So it would be reasonable to expect to get up to about 83.5 as an initial target, and then we'll have to see how we're doing after that. Over on the daily chart, here's, wow, that's pretty good. So there's our intermediate low right in the timing window that we had marked out prior, and we're already approaching this 78.6% fib at $79.69. So this has a positive reversal scout, and today we went from negative to neutral on the slim ribbon. So again, this is one of those that, you know, watch for a pullback in here and then possibly up again. If nothing happens, then you don't get that opportunity, then perhaps out here in this timing window at the end of June.
All right.
Great
job,
work, Katie. Arvi, you have about 10 minutes and then we have to go to Matt.
Okay, sounds good. We will be able to run through all these. So let's go and look at TSLA first. Again, this is acting really very nicely. This is a higher low, a higher low that is likely to form into this low, which is due 626 to 87 again, and we'd still look for this to turn back up to the upside. And once that low forms, keep in mind there is earnings that is due right around there as well. If we see what's happening here, also acting well, still only looking for higher highs and higher lows here. There's a low that's due 613 to 623. And in the short term, it's reasonable to move up to around 230.15. If we go ahead and look at META, that is Meta, of course, just a monster move on the upside off of the low. We're looking for this to form its high shortly here. We have a zone from 277 up to 305 low odds of moving all the way up there. And we are looking for this to actually roll back down on the downside. These zones are rising, but it's 235 half to 210 quarter. And let me also highlight the timing. There's a low that's due 7.3 to 8.14. What's happening here on the short term is still positive. Higher cycle highs, higher cycle lows, and each of these cycles here, we have a zone from 273 to around 281 half. We are looking for it to form its high around there and then roll down. We haven't had any kind of moves through our key level, which would be that 78.6, and that comes in again right around 251 half until we see that low that actually moves through 251 half. The overall bias here is still positive. I just have to emphasize that, but we are going to be watching for this to actually form its high and then roll down. There's a low that's due 620 to 629. If we go ahead and move on to, we already covered SHOP. Let's look at SQ. This is acting okay here. Let's pull it up. Of course, only on the short term. On the intermediate term, it's been obviously very weak. We are looking right at that 78.6 fib at around 66.76. We like to see it fail around there and then roll back to the downside here. Otherwise, if it doesn't, this would really not be as clear. There's a low that's due 626 to 814 here as well. And if it were to fail, we would look for a move back down to these old lows around that 55 half area. If you go ahead and shift over here, you can see still on the short term, this is acting favorably. Okay, so there is a 78.6 around 67 quarter. We have this old swing high right there at 70 half or so. So looking for still a bit higher and then a higher low to form. And then after this low, turn back up again and then watch it to fail after that. There's a low in the short term that's due 626 to 7.3. We shift over to the XLF. There are a few questions here on the XLF. We are looking for this as to having already formed its low and are now turning back to the upside, which does make sense. This is a low that was due 5.1 to 6.19. In the intermediate term, reasonable to rally up into this zone from 34.5 to around 35.70 or so. If we shift over here, you'll see what's happening. There is a higher low that is also forming here. There's a low that's due 6.7 to 6.16. We are looking for just one more move down and then for that to get bought quickly and then for this to roll back up. On the downside, this zone is rising, but it's 32.38 to right around 31.97. Okay, so let's look at the XLF. Shift over to GDX. What we're looking for is for one more move down in the short term. Okay, so if we go ahead and first look here, there is still one more move down that is likely due. There's a low that's due 6.19 to 8.21. It is reasonable to move down to this zone from around $29 to 27.15 or so. So that's what we are looking for. One more move like that on the downside. If we shift over here, you'll see what's happening. Again, it is due to have one more move lower. As I just said, we are looking for it to fail around 31.70 to 32.62. And then at the very least, in the short term, look back at this old low at $30 or so. And this low is due 622 to 630. Shift over to MOS. Very interested here. There is a low that is now likely forming in MOS. This low is due 515 to 619. We are looking for a move only to around 4140 to 4440 or so, but that is still, a large move from where we are actually trading now, which is around 34.5. If we shift over here, you're seeing that this is actually due to form a low here as well, a low that's due 531 to 612. So watching for this to turn back up to the upside and rally up into the zone from around $38 to 40.18. Shift over to ETSY, and then I'll hand it over to Matt. what we're looking for here is still one more move lower, but you can see that this low is only due 619 to 87. We are looking for a move down to this zone from 76.18 to 65.83. Let's go ahead and shift over here. Again, I haven't had this one fully updated, but I want to highlight our levels for you. We are looking for a rally up into this zone from the 61.8 to that 78.6, so 95.57 to 99.69, and then I'm just going to draw this in for you. Rally and then form its high and then get one more hit down into this low, which is due again around 721 or so. If we shift back to the to what's happening here, again, that will be in line with what's happening on the weekly as well. So looking for one more hit down, highest odds into mid-July. And Matt, I'm going to hand it off to you.
All right, excellent.
All right, great
Thanks,
work.
everyone. Yes. All right, so I'm going to jump in. It's going to be very quick here. I'm going to give a brief overview of the premium services preview that's running right now for a couple of weeks. And there was a group, our free list, that was invited to come today. And I want to make sure that if you haven't signed up for the PSP, that you know where to go to do that. So I'm going to share a screenshot here, or share my screen. Can you see it? Just give me a thumbs up, homepage. No,
Not
nothing
yet.
yet.
Nope,
Okay.
not yet.
All right. Try this again.
Good
How
to
about
go.
now?
There we go.
Yep.
Good to go. All right. Excellent. Okay. So on the home page, there's a sign up on the top banner here. You click that. That's going to take you to the PSP landing page info page. And then there's click here to claim your free trial. So if you are here and are not signed up yet for the PSP, then this is how you can get signed up. If you are already signed up for the PSP, then there's a specific dashboard, which I'm going to show. But before I do that, wanted to let our current premium members know the following. If you're level 4, you already have access to all of this. If you're level 3, you already have access to everything but the premium, the MCM premium. So if you are level 3, this is a great chance to be able to test out the premium version of the MCM, which is going to give you live data throughout the market session for intraday trading style and near-term trading style. So you'll have access to more granular market data with utilization of our 2 momentum indicators, the Slim Ribbon and the Reversal Scout. If you are new and you're part of the PSP, or if you're coming back to us because you maybe were once a member before and now want to see what's new, here's the dashboard for the PSP. So if you are a PSP member, this is the primary place that you're going to find out where you get the information. Showing level 1 and level 2 really quick. If you're level 1, make sure you scroll down because they are there. All the services that you don't normally get are now visible and accessible in your dashboard. So if you're level 1 or level 2, make sure to scroll down and those will appear for you. Getting back to the PSP members, this is your primary dashboard. It's got everything in here. I'm going to do 2 webinars coming up this week. One on Thursday will be trade planning. So just about twice a month, I host a trade planning webinar, live webinar with our level 2, 3, 4 members. And what we do is we step through the askSlim methodology. It's a deep dive into it. And I apply the cycle timing, cycle structure, momentum studies, fib high, swing low analysis to produce the fundamental technical evidence needed for trade planning purposes. I do it at multiple time frames, everything from intraday to, obviously it's not cycle analysis on the intraday or near term, but I'll step through what we use in terms of our method for those time frames, all the way up to the intermediate time frame using all of our tools. So I would recommend that you come. You can ask questions. It runs anywhere from an hour and 15 minutes to sometimes 2 hours. So that'll be on Thursday. Then on Friday, I'll do a PSP tour and demo. So I'll step through these services and I will walk through those and demonstrate how we use them for trade planning purposes and the logic that goes into the value and benefits to you as a trader, whether you are an intraday trader, I'll talk about what services work for you, or if you're an intermediate trader, or even if you're more of a longer term position trader or active investor. So that'll be coming up on Friday. I will be sending out more information on that on Discord. If you are part of the PSP, we have added a channel, a help desk channel, where you can ask questions regarding the PSP in there. You will have access to many of the channels on Discord, but they'll be view only. Our Discord is reserved for premium members. It is not accessible from the outside, and we keep it that way so that the content and the conversation is very focused regarding market information. There's no third-party selling. There's nothing of that nature, and you get direct access to the analyst team. Myself, Arvi, Katie, we have specific channels in here that we cover, or if you post questions, comments into any of the services channels, we will answer those. So it's very robust, it's very focused, and there's a chance to connect with other askSlim members. So to wrap it up, again, if you're PSP, you go to your dashboard. That's where all of your services are going to be. There's so many of them. There is a video in here from last year, or August actually, that I did that covers mostly everything in here except for the MCM. So I will cover that on Thursday, and I'll cover it again on Friday. There are, if you go to the market condition monitor, just real quick, that you can click on the question mark, and that will open up the resource section for the market condition monitor. Again, and you'll see here that there's usability resources for the market condition monitor, and you can review those prior to the meeting on Thursday and Friday. Okay, that's everything I wanted to cover. If there's any specific questions, I'll take 2 minutes and answer those now, or you can just email me or connect with me directly on Discord.
Doesn't look like it.
Nothing coming in. Okay.
Yeah.
Yes, the webinar will be recorded. Replay will go out sometime in the next couple of hours. So you can watch for that. We'll make sure to send it out to all of our premium members, as well as PSP members, as well as free members.
All right, great. I'm just going to answer a couple more general questions. Matt, thanks for that. Great job on explaining all that stuff. We still have a lot of people in the room, and a couple questions that I want to answer that are general. And one of them is, what does the service provide for option traders? Well, you can actually write to Katie at askSlim.com, and she can help you with that. But I really want to refer you to her videos that she does that are available. Is that level 3 and 4?
Yeah, Katie's videos are reserved for level 3 and 4. Yes.
Yeah, Katie does an amazing job of applying our work to option trading, and that's just a great place to learn. The work that we do certainly can help you with what your biases are, how to direct your option positions, and I think that is something that is really important.
Yeah, Slim, I just want to just back you up on that and say that most of the work we do is very supportive of directional bias at multiple time frames. So as an option trader, that is critical. And when things are in conflict. So if you're an option trader that likes to sell premium, you have a good feel for situations like that are arising.
Yeah, and we have a question from Bader. Does the askSlim cycle analysis course, that workshop, contain Hurst cycle models of 9 years and 54 months? We have shown what the longer term cycles are in the stock market, and other markets. If you are referring to the nominal cycles, that would align with. We talk about that in the cycle workshop. When we look at Hurst's 8 principles, so we will discuss that, and I make a point that the nominal cycle model is one that I believe the least in of all of Hurst's principles. So I believe much more in the variances and how we understand those variances. All right, we are going to wrap this up. I want to remind you that you will be able to get, if you're in the PSP, you'll be able to see lots of stuff for this next couple of weeks, and also make sure you watch Arvi's Market Week, which will be out tomorrow, and you'll also be able to see that in the next couple of weeks. If you like what we do here and you want to participate in our askSlim Lives, generally these are for level 1 through 4. So you're going to want to become a level 1 through 4 member after your PSP expires in a couple weeks, and that will give you access to our live shows. Team, you did a fantastic job. Any parting points you want to make?
Huge crowd, great engagement, so many questions. It's great to see the activity.
Yep.
Fantastic.
I think it was a wonderful show. We had as we said, one of our largest crowds ever. So that was awesome. And thank you all so much.
Yeah.
Good trading this week. Nice to see everyone.
Good
Yeah.
trading.
All right, that's it. And for those of you that are members, see you in a couple weeks.
All right, take care.